wonder how much life insurance you actually need? Well, by the end of this video, we'll give you all of the facts so that you can make an informed decision when figuring out what is the number. Welcome back to Navigate Your Wealth. I'm Samantha Irish.
And I'm Karen Stawicki. And for the best advice on how to create a successful retirement using both life insurance and annuities, subscribe to our channel.
And don't forget to hit the notifications bell so that you never miss a new video. So we started this video with the question, how much life insurance do I need? How much death benefit is enough? But the question that I want you to ask is, what are you trying to protect? See, if the answer to that question is that you want to protect your family in case you're gone, then what we actually need to protect is your income. We need to make sure that we can replace the income that you would have earned over your life.
And really, that's what insurance is all about. It is designed to protect something. So if the income is what we're trying to protect or replace, then for every $50,000 of income you earn, you need $1 million worth of coverage.
And $1 million feels like a really big number. So for $50,000 of earned income, I need $1 million of death benefit. Could $500,000 be okay?
Well, here's the thing. We have clients come to us with existing insurance in place, and typically I'll see $250,000 or $500,000 in their information and ask them, how did you settle on that number? And the answer usually is, it seemed like enough, or it could pay off the mortgage.
Right.
And I will tell you, $500,000 is a big number, but it's not enough. No. And for the reason I just said, I didn't make that number up, 50,000 for every million. The insurance industry actually has a calculation known as human life value, and that is a factor that calculates your earning capacity over your lifetime. If you're taken away prematurely, your family lost your lifetime of income. So if the insurance is supposed to replace what was lost, that factor then comes into place. Now, interestingly enough, a 20 or a 30-year-old is going to be able to get 20 times earnings. So again, if you make $100,000 a year, 20 times 100 is 2 million. Interesting. 2 million times 5 is $100,000. So again, I didn't make this up to sell big policies. This is actually what you could qualify for. Now, as you get older, 40, 50, 60 years old, that number goes down 15, 10, and so forth. In retirement, they have an estate calculation that allows 1 times your net worth to be factored in there as well. Remember, the insurance company's job is to replace that which is lost. In this case, it's income, and full replacement value is the only way to go.
Leave a comment in the section below and let us know how much death benefit you currently have, or if you've ever done a calculation like this. And then after the video, make sure that you check out the video titled, How to Spend My Death Benefit While I'm Alive, so that you don't have to die to enjoy the benefits. So you talked about full replacement value. The goal of the insurance company is to make sure that we're completely replacing your income. So ask yourself this question: why do I insure things? You have insurance on your car for replacement of your car. You have insurance on your home because if something happens to your home, you want to make sure that it's replaced. Let me ask you a question. If you have a beautiful 4-bedroom home, 2 stories, and it burns down in a fire, would you be okay with the insurance company saying, here's a check for $100, you can go down to Walmart and get yourself a little pop tent. You've still got the property, you're fine. Of course not. If your 4-bedroom house burns down, you want to replace a 4-bedroom house. Listen, a family of 4 in a tent is not fun. The same is true with your life insurance. If you are making $50,000, $100,000, $500,000, if you are gone, you don't want the insurance company to say, here's your $100 check, because at the time you didn't think it was important. Our goal is always to begin with the end in mind. We've got to replace the full replacement of that income.
Here's a great story that I love to share with people to really point out the significance of that amount. So let's just assume a couple comes into the office and they have put $250,000 in place because they thought it was big enough,
Absolutely.
right? He makes $100,000 a year and she's a stay-home mom working her tail off with 2 children. So he goes out to work And on the way home that day, a doctor, very, very wealthy doctor who just had a 4-martini lunch that lasted a little longer than it should have, runs through the intersection and he's gone. What's the first thing we're going to do? Find the best personal injury attorney we can find. So we're going to go, after obviously mourning the loss of this man, we're going to go to court and we are going to substantiate why this woman and these 2 children should get a very, very large check. Now, when I'm telling this story, I will ask the gentleman who's sitting there, should we sue this doctor for a lot of money? And of course he's going to say,
absolutely.
Yes. And I'll say, well, how much? And he'll say, a lot. And I'll say, I agree. Put a number on that. He says, $4 million. I go, all right, let's go. So we're in court. The personal injury attorney is walking every day this jury through the pain and agony of sharing the story that he's gone. He's never going to be able to walk his daughter down the aisle. He's never going to be the coach to the kids' soccer or baseball team or whatever. And everybody is just bawling, right? I mean, it's a very heartwarming, terrible, terrible story. Meanwhile, the doctor is sitting over on the other side, smug as can be. Jury finally comes to a decision, hands the judge a note. He looks at it, thanks them for their time, and says, while I agree with the jury to award you, ma'am, and your 2 children $3.5 million for the loss of your husband, I'm afraid I can't do that. Because you see, when your husband was alive and in a lucid state of mind, he valued his life at $250,000. Now, the good news is he can't do that. But it made you think, didn't it? You see, the jury agreed because of human life value, what the doctor took away from this family in terms of the earning capacity of this man who made $100,000 a year. $250,000 effectively gives her 2.5 years to find a new husband and father for their children. I know that's crass, but that's really what $250,000 will buy. It's not enough. Here's the other question to ask yourself. $250,000 is enough if I choke on a chicken bone at lunch tomorrow. But if I get hit by a drunk, successful doctor, I want my family to have $4 million. $250,000 isn't enough. It's not full replacement value.
If you'd like to learn how to protect your income or find out what your human life value is, click on the link below to apply to become our client. And if you liked this video, please give it a thumbs up, subscribe to our channel, and share it with a friend. Thanks for watching, and remember, if what you thought to be true turned out not to be, when would you want to know it?